If you've been trading long enough, you already know the system feels rigged. Stops get hunted, indicators lie, and strategies that look perfect still lose. That's not bad luck. That's how the system is designed. Most traders don't lose because they're dumb or lazy. They lose because they're playing a rigged game against institutions who already know the outcome. This isn't about mindset or just hold longer. This is about math and data, and why retail keeps losing the same way over and over. Everyone argues about the best strategies. That's not the real battle. The real battle is in boring old settings. Two traders can use the exact same strategy and have completely opposite results. One survives, one blows up. The only difference is parameter selection. Institutions don't ask, does this strategy work? They ask, which versions survive under stress? So instead of reinventing the wheel, we're starting with a strategy I personally use daily, the MACD liquidity tracker. Then we're doing what most traders never do. We're stress testing hundreds of parameter setting combinations and cutting anything that can't survive real market conditions. By the end of this video, I'm giving you the exact optimized settings that survived our full stress test. No guessing, no theory. This entire process is running inside Quant Trading Pro. Not because it's flashy, but because doing this manually would take months, not minutes. What's happening here is the AI is suggesting which parameters actually matter and giving us realistic ranges to test. That alone removes all the guesswork. But we're not blindly trusting it. We're intentionally widening those ranges because markets don't reward narrow assumptions. This isn't about finding the best settings. It's about finding which settings survive when conditions change. This is exactly how institutional desks think. Let models propose, then stress test beyond what feels comfortable. If a strategy only works inside a tiny range, it doesn't really work. This is why we built Quant Trading Pro this way. The AI accelerates the process, but the trader still controls the risk. While this is running, I want you to notice something. This isn't optimization for bragging rights. This is survival filtering. Whales don't trade indicators. They trade liquidity. And liquidity comes from predictable retail behavior. When thousands of traders use the same default settings, they create clusters. Those clusters become targets. If this feels personal, good. Every trader has been on the wrong side of this at some point. This is why a strategy can look amazing on YouTube, and then slowly drain your account. Right now, the AI is burning through combinations that never stood a chance. High win rate but massive drawdown? Gone. This is where most traders get tricked. They chase win rate and ignore drawdown. That's how accounts die quietly. We're tracking win rate, drawdown, and net P&L. And here's the hard rule. Anything over 30% drawdown is automatically disqualified. No excuses. All right, now here's where it gets interesting. Because what survived was not what most people would expect. The settings that survived were boring, slower, and way more disciplined. Fewer trades, lower excitement, higher survival. Finally, these are the exact settings that passed every filter we set. These stayed under 30% drawdown, maintained consistency across market conditions, and outperformed the rest of the test group. This is what real backtesting looks like. Not cherry-picked screenshots, not hindsight trades, real data. The edge isn't the strategy. It's removing the ones that were never going to work. Like and subscribe for more.